to start today. Thanks a lot to the attendance. I think we are more on this side than in that one, so appreciate a lot that you're attending here. We're going to have here the panel of the green bonds. We're going to, since we are so few people, so I'm going to let that every one of us give a little bit of an introduction of themselves, and then we're going to start with the panel. The panel is supposed to last for an hour and a half, but I mean, we can make it short depending on the questions.
I'm sure they will tell their friends, this is really good.
Yeah, you guys need to invite people. But anyway, just to tell you, I will give a quick introductions of about 3 minutes. Then every one of my colleagues will have 10 minutes. And then we'll have some space for questions and answers, probably half an hour. So for giving the presentation of every one of you, my name is Jorge Silva. I'm the General Counsel of CAF. CAF is a multilateral organization similar to the IDB, to the World Bank. Works mainly in South America, Central America, and also in the Caribbean. I'm very happy to be here and participate in this event. So if you want, we can start from there.
Hi, good afternoon. Can you hear me? Well, I guess it's a small enough room. I'm not sure if these are working, but my name is Betty Moy-Huber. I'm a corporate partner at Latham & Watkins, an international law firm. I sit in the New York office in the Oh, I see. Oh, okay. Oh. But still speaking to, okay, I can project my voice then. So I sit in the capital markets group at Latham, and I'm one of the global co-chairs of the ESG practice. I cover green bonds, sustainable finance, ESG issues for boards, banks, you name it, and private equity funds. It's great to be here today.
Thank you. My name is Lamin Trawale. I'm with the UNDP Sustainable Finance Hub, headquarters here in New York. I joined the team, I think briefly, that was like 1 year ago in 2022. Previously, I was with the Ministry of Finance Gambia at the Debt Management Office, and then the World Bank Group, IFC Treasury and Syndications Department, and here I am now with the UNDP Sustainable Finance Hub. So I'm with the global debt team, and then we've been supporting countries in thematic bond issuances, green bonds, blue bonds, SDG, and then sustainability-linked bonds. So I'll pass over here. Thanks.
Thank you very much. My name is Carola Moreno. I head the Financial and International Affairs Division at the Ministry of Finance. I'm advisor to the Minister, Minister Mario Marcel. As part of the division, we have, I oversee the Debt Management Office. And so we structure there all the debt that is allowed to be issued during the year. We make all the strategy. I was part of the team that issued the first sovereign bond in Chile in the late 90s. So I'm really happy to be now innovating.
I'm Phil Keefer. I'm the Principal Economic Advisor at the Institutions for Development Department at the IDB. Thanks for letting an economist join you. My department, before I was at the World Bank for quite a while, my department has a division in it which works a lot on green bonds, both developing the markets for green and social bonds and also individual transactions. And I'm relying heavily on those people for today's intervention.
Good afternoon. My name is Juan Labat. I work for the Ministry of Economics and Finance of Uruguay. I coordinate an environmental unit there in the ministry. We worked very close with the debt management unit of the ministry, so we are working together, moving ahead a sustainable finance agenda. Let me say that I'm very proud. It's an honor to be here presenting, and thanks to CAF for organizing this panel.
Thank you. My name is Tony Recine. I work in CAF in financial policies and international bond issues. We are the division that is in charge of raising funds through capital markets, including thematic bonds such as green bonds and social bonds.
Thank you. Thanks a lot, everybody, too, for the introductions. I just want to thank Elizabeth Fried, also from the CAMP team, because she made everything to happen. She made all the work and the logistics and the plan. And thanks a lot, Elizabeth. from the organizations. Thanks. Very briefly to say, CAF is, along with the IDB, along with the World Bank, our main agenda is it's basically related to be a green bank, related to climate change, related to create financial mechanisms to deal with the climate changes that we are experiencing. So basically, the plan with the panel is that we can present the experiences of two countries, Chile and also Uruguay, the experience in working with green bonds, and then we'll have a second segment of the panel, which is more focused on the multilateral organizations. Basically, we have the experience of UNDP, the experience of CAF, and the experience of the IDB. So basically, that's the plan. At the very end, we'll have Patty to give us some final remarks and some conclusions for the day. And after that, we can have some questions and answers, if that's the case. So, Carola, please. Thank you.
Thank you very much. I was asked to comment a little bit on what is the framework that we have in order to issue thematic bonds, and whether it has been useful, if it's following best practices, advantages of issuing this type of thematic bonds, and also what are we looking forward to. So I will try to comment on this in a way that I can pass the main messages. So first of all, for us, it's crucial to have a framework. It gives credibility, transparency, and it allows, of course, for investors to trust that what it's been done and what, for instance, the projects that are underlying the issuance or the KPIs that are being associated to the issuance are credible, can be trackable, and so that is a main, let's say, like a goal of motivation to have a framework. In our case, we have bonds that are on the side of issues of proceeds, use of proceeds, sorry, and then the SLB, which are linked to some KPIs. So in the case of the proceeds, the framework includes the selection of sectors, but also the selection of projects. And in doing this, it has to be aligned with what are the main priorities in the budget law, but also in the state administrative law. So it has to be consistent. And also, since, of course, bonds are issued at a maturity that goes beyond the administration in term, we have to be able to be consistent to what future budget laws might, frame. And that is, in the case of Chile, not that hard to do in a sense, because we have a structural fiscal rule that allows us to more or less be able to project. And in the selection of projects, okay, we have this priority, but also we need to make sure that these are projects that we can verify that they actually are green or social according to the alignment that they have either to the social development goals at the international standards. And then I would say the third part that is really important on the framework is reporting and reporting basically, and verification. That's the word I was searching for. So we have to report on the allocation of resources, on eligibility, and very importantly on impact. So this is done annually by the office, which at the same time manages. Another part that is very important in our case and that also builds into this credibility that I was saying is the second party opinion. So we hire an external firm in order to follow best standards and see the alignment to the ICMA, I think it's the acronym in English, but the International Capital Markets Association, the standards there on green bond standards. So maybe two more things that I would like to highlight. When I said innovating, it was a way of, introducing what we're actually doing. We're the only country that has a social, green, sustainable, and sustainably linked bond. In June, we issued a very interesting bond that it's the only one available in the market, international markets, that it's a sustainability linked bond linked to climate indicators, the same ones that we had on the SLB on early 2022, and also to gender equality and women empowerment. So we introduced a KPI that the goal is to reach from a current level of 17%, I think it is, to 40% of women in boards. And this is public and private, so it's also very, very interesting. And today we closed the transaction with the same KPIs in pesos and was very successful. So I would say that this opens market attracts new investors, and we're getting even the benefit of financial conditions being better than plain vanilla instruments. We calculated savings between 70 and 100 million on the present value from the stock that it's already issued as thematic bonds. So that is also something to look forward to. Not only, of course, aligning, in our case, climate national policy with the financial strategy of the country, and now also with social indicators, but also we're getting the benefit of financial savings. So,
Thank you.
Thank you. Thanks a lot for giving the details of the experience in Chile, Carola. And now we'll have the experience of Uruguay with Juan. Thank you.
Hi, thanks, Carola, and thanks to all of you to be here. I'm going to talk about the experience of Uruguay, about in relation to green bonds, to sustainability bonds. But I would like previously to mention some things to give a little context, and to give some of the framework of the idea of the concepts that make us think about certain changes that we can make in the bond markets. First, as to give some context, I think we all know that we are experiencing some particular times when thinking about the environmental situations that is occurring nowadays. Climate change, I believe it's something that it's having negative impacts all around the world. Just to give you an example, in Uruguay, we used to think that we were lucky to have a lot of drinkable water, and nowadays we are experiencing a really important drought that makes our drinkable water. We are not having drinkable water, and we are experiencing some problems. For us, that was we could never think about being in that place, and nowadays we are experiencing this impact that we believe it's related with climate change, along with other negative hazards that affect us. We believe that we have to focus our politics considering global public goods. I think that concept it's very important for us, and we have to mention and to put in relevance this concept, the global public goods, and we have the idea that we have to see how the different countries and institutions can help in safeguarding global public goods. We know that developed countries are committed to move and to put a lot of resources in order to work and to safeguard global public goods, the environment, climate change. Developing countries, we have to commit and to achieve the objectives and the commitments that we have put in our different NDCs in the Paris Agreement. That is important, and we believe, and I think this panel and integration it's important. We believe that multilateral development banks have also a role in this these efforts that we have to make. So that's for me very important. We need to work in a coordinated way with a multilateral approach in order to safeguard global public goods. And when doing so, I think it's important we believe in the Ministry of Economics and Finance that it's important to put premiums, to incentivize the countries and the companies that achieve their commitments in order to safeguard global public goods. I think Carola mentioned Chile, it's an excellent example of green bonds, social bonds, sustainability-linked bonds. Uruguay has made our first experience in October this year, and in that bond that we issued in October of last year, I think we put an innovation that goes in this sense. It's like we have to think, we have to start thinking and giving premiums and giving positive incentives if countries and companies achieve their commitments. So I think that in this bond that we issued on October, that let me say that we could do it. We received a lot of help and support of the IDB and also of the UNDP in order to verify the KPIs that we put in that sustainability linked bond. But I think it's very important to mention that there we innovate because we make the market to accept that if Uruguay achieves its commitments, its Paris Agreement commitments that we put to 2025, the market accepts to reduce our interest rate, to give us a step down. I think that was unique, and we believe in the Ministry of Economics that it's an idea, it's a concept that we need to move forward. We have to incentivize countries and companies to achieve their commitments, of course, when safeguarding global public goods. And we believe, and we are working to move that agenda to our relation with multilateral development banks. We are working with CAF, with IDB, with the World Bank, in order to design loans that has a certain similar structure. If Uruguay achieves, if Uruguay achieves certain objectives, 2025 we have it in our first NDC. 2030 we have objectives committed in our second NDC. If we achieve those objectives and other objectives that we can define, the interest rate goes down. It's a step down. So we receive a premium, and the money, the resources that we save, the country could put it in other sustainable politics. I would stop there. Thanks.
Thank you, Juan. Then we have after hearing the experiences of Chile and Uruguay, we'll have the experience from the multilateral banks and multilateral organizations. We will start with Philip, and then with Lamin, and then Tony. Go ahead, please.
Great, thanks. So I'd like to take a step back, picking up on this idea that, well, why are we doing this? We're doing this so that we can bring resources to climate change. That's why these green bonds exist, and then social bonds exist so that we can bring resources to these sort of valuable, these valuable objectives that we have. But why these bonds? Why not just raise money with any bond whatsoever? There's an idea out there that investors will pay more, they'll accept a lower interest rate in exchange for commitments to pursue valuable goals that the investors value. So it could be climate, it can be social goals, but we don't actually know, the market is still incipient. We don't quite know how big that market is, and the conditions under which investors will accept a discount or pay more for a bond that has these objectives isn't quite understood, and we know it varies a lot depending on what the objective is. And so as a consequence of that, you need, this is a role that multilaterals are playing. Multilaterals are helping to build these markets and helping to solve some market failures that keep these markets from really exploding. I think you've already sensed what I just wanted to say that the size of this market, therefore, is really depending on sort of the intrinsic motivation of investors to want to do these things, to want to achieve these goals. It depends on politics. It depends on what politicians, for example, tell multilaterals that they should lend for. So we are becoming climate banks because our owners want us to be investing in climate causes. But that's a decision that was made, and it's not clear that in private markets that decision is regularly being made. So we're trying to inspire that and make that happen. And then laws and fiduciary issues surrounding private investments also kind of affect the size of this market. So if you're a pension fund, a Canadian pension fund, can you accept can you pay more for an investment that achieves a laudable social goal, or maybe Canadian pension holders don't want you to do that? So these are kinds of the issues that are affecting the size of this market and the fluidity of this market. So there's a few market failures out there that are problematic. One you've heard a lot about already in Uruguay and Chile, because they're doing great things to try and solve it. That's the verifying commitments. So you say we want to pursue a green goal, or we want to pursue a social goal, and so an investor will say, well, there's no accounting firm out there that's going to say, well, you have invested this money correctly and you're not going bankrupt. Who's going to do that for the green goals and the social goals? So setting up this kind of verification mechanism is extremely challenging, actually, and it's going to be different for every goal. And because there's many goals out there, the challenge is accordingly a lot more complicated. And then multiplicity of goals is sort of the second issue. This is a pretty fragmented market. You can already see that by the variety of bonds that are out there. That means that people aren't quite sure which investors are interested in which kinds of goals and are willing to pay more for a bond with particular goals. So people are exploring. We're exploring that with different kinds of bond issues, ranging from the role of women to climate change, and in climate change, a whole variety of goals there as well. It could be adaptation, it could be mitigation, and again, we don't really know the size of the markets for those different goals. So and then the third kind of problem is or market failure or difficulty is that we're creating markets, but no single issuer has an incentive to invest in creating a market that's going to benefit everybody. So we need somebody out there, we need groups out there, call them multilateral banks, that will help internalize the costs of building markets, because private actors just don't have the incentive to do that. So so what are we doing in the IDB in that regard? We have one thing that we've done that's quite cool. I mean, we'll see if it has legs in terms of really driving a premium for green bonds, is we've created a green bond transparency platform. And this, I think, even uses blockchain. And the idea is that issuers will load their commitments into the platform, and then they'll load the evidence that they're complying with their commitments into the platform. And this could be all kinds of issuers, not just sovereigns, but public development banks, private firms, public sector firms. They all load it up, and it's blockchain, so it can't be messed with. That's important, especially for, say, a private issuer, that it's kind of, so you can have these second-party verifiers, but it's not just that they verify, it's also that their verification gets loaded up to the website. So 80% of Latin American green bond issues have loaded up this kind of information onto this platform. What effect this is having on the greenium, the premium that investors are willing to pay for Latin American green bonds, we're not quite sure yet, but we hope there's something. The second huge way in which all multilaterals and just the world in general is working, and we're trying to help in that as well, is this development of standards, right? So that's kind of trying to reduce this problem of fragmentation and make it more manageable by saying, okay, if you have a bond that is achieving these 7 goals, that counts as this kind of bond, whether it's a sustainability linked bond or a green bond or a social bond, it counts. And so any portfolio manager that needs to have a certain fraction of his portfolio dedicated to those kinds of bonds can say, aha, I can ring a bell on this one. But getting consensus on those standards is naturally hard because everybody cares about different things. So everybody will disagree. So some people's greenwashing is other people's fixing the planet. That's the bottom. That's the issue, and that's why the standards development is hard. But that's why multilaterals have a role to play in trying to coordinate and negotiate and clear the waters. So naturally, in a market like this, which is incipient and there's not very many standardized products, everybody needs help with issuing their bonds because every single bond is sort of this boutique area, and we help. The CAF is help. We're all helping issue bonds. We've done 81 thematic bonds across all the, for all kinds of different issuers in Latin America, and everything is, and we help on everything from designing the bond to thinking about the verification procedures and developing statistics to, those are the kinds of things that we're doing. So I'll just close with one interesting factoid that my colleagues informed me about. It's investors get interested in Latin America for different reasons, and it turns out that many of the investors in these thematic bonds weren't previously interested in Latin America. So they invest in the thematic bonds, and there's a spillover effect. It turns out they show greater interest in sort of other run-of-the-mill Latin American sovereign issues or corporate issues. And I think that's kind of exciting. And people haven't really been thinking about that as kind of the spillover benefit, that we are doing this boutique-y work, but it could have a spillover into sort of general market conditions for Latin American bonds. And with that, pass it on. Thank you.
Thanks a lot, Philip. Very, very useful for the analysis and the logic of these bonds. Alamin, please.
Thank you, colleagues. I think you've made my work a little easier. I'm Lamin once again with the UNDP Sustainable Finance Hub. So we also play a critical role in this space. That's the sustainable bond market space, or we call it thematic bonds, for example. And I think specifically today we're discussing about the green bond framework, but we've also seen experiences from countries like Uruguay on sustainability-linked bond, and Chile being a leader in innovation. I think Chile really deserves a round of applause for that. I think countries are really following your footsteps, especially in the Latin America. Now, if you look at the thematic bond market or the sustainable bond market, which includes the green bonds, social bonds, sustainability-linked bonds, and everything, it's growing tremendously. We've seen at the end of the first quarter of 2023, it has reached a landmark of almost $3.9 trillion in these thematic debt instruments, of which we know, of course, green bond comprises over 58% of this. So green bond issuances from 2006 to date, it has culminated to around 2.9 trillion, just green bond alone. So that's, 2.3 trillion on only green bonds. So which is around 58% of that, followed by social sustainability. And we've seen sustainability linked bond also picking up. And then you have transition bonds. So in essence, I'm just quoting these numbers to show that indeed this market is growing and is growing at a faster rate. The reason being, I think they've explained it, because of climate change. Countries would indeed go to the market, raise funds, but raising these funds for the right cause, I think that's what we're advocating for now. Now at UNDP Sustainable Finance Hub, one would wonder what is an international development association doing with something of finance in nature, that is these thematic bonds or green bonds, and for example. Now at UNDP, we have a 6-step process what we use to support countries in these thematic bond issuances. It's something, we have a global focus wherein we look at both Latin America, you have presence in Africa and as well. So the support is in such that the 6-step support process is that we support countries in developing these thematic bond frameworks. So I was happy when Chile gave the examples and then giving emphasis on what the framework does, because that's what distinguishes these thematic bonds, let's say green bond, from plain vanilla bonds. You have a framework in place, and in this framework it is basically geared towards standardizing the process. And then all this framework, mostly you would see 4 key elements. You must define what the use of proceeds would be. For example, if it's a use of proceeds bonds, you talk about the process for project evaluation and selection. It has to be clear. Management of these proceeds. How do you manage the proceeds? And then reporting. So, and very recently now we know how critical it is. You just don't report on the allocation of those funds, but the impact it has on the economy as well. So UNDP, Sustainable Finance Hub, we've been very critical in supporting countries in first developing this framework, because we know these debt instruments to many countries are still very new. So we've supported over 42 countries as of today, and then with a total of around 13 billion issuances. Now, it is important, Uruguay gave their case. We've supported Uruguay in that landmark 1.5 billion sustainability-linked bond. I think the 1 billion was the new cash, the 500 million was more or less like liability management. So UNDP played a role in the KPI verification. And then very recently too, in July or in May of 2023, we've supported Indonesia in the landmark blue bond that they've issued. So our support actually basically is geared towards having that framework in place. We've supported a whole lot of countries. Indonesia, back in 2018, we've supported in the developing their first green bond framework. And up to date, this is the same framework they're using to issue some of these thematic bonds. Indonesia too, just like Chile, I think they're very much advanced in issuance of these thematic bonds. They've been issuing green bonds, SDG bonds, green sukuks as well, all those things, and bringing the Islamic perspective to it as well. So we've supported countries in Africa. I think even after from this session next weekend, we'll be going to Africa and supporting some of those countries in developing these frameworks, and then perhaps working towards helping them first also in identifying eligible projects. Because what distinguishes these green bonds or thematic bonds, like I said, is how these proceeds will be used. Now, in many countries, okay, it's one thing to have the framework. At UNDP Sustainable, we go further to say, okay, we will still work with you in helping identifying eligible budget items that would be able to fall, that would be qualified to be financed through this framework. Let's say if it is a green bond framework. We go further also to support them in getting a second party opinion. Like she said, now it's not just a recommendation by the International Capital Market Standards to have an SPO. That's the second party opinion. A third party, an external verifier to give an opinion on your framework. But it's not just a recommendation now. It is a key recommendation as per the ICMA international principles to have this SPO. So we are very instrumental too in helping countries getting that SPO from these external verifiers to sort of give credibility to the whole process. That is to the framework developed. And then we play critical roles too, even in the issuance stage. We're not a financial institution. We wouldn't do any underwritings. We do have partnership with some financial institutions. However, when it comes to some road shows and stuff, we do provide supports. And even the most critical thing we do would be after issuance of these thematic instruments. Now, how do you go about reporting, allocation reporting? The proceeds that you received, how do you allocate them? And then the impacts they are having on the use of proceeds. So impact reporting as well. So we play a critical role in supporting countries in all those throughout the process. So in essence, we are very much involved from the pre-issuance to the post-issuance stage of these thematic bonds. And then henceforth, this is the approach UNDP Sustainable Finance Hub have been taking, and then we've been partnering very well with multilateral development banks, like I said. So I think in summary, this is our own contribution to this space. Thank you.
Yeah, very interesting, Lamin. Thanks a lot. Then we're gonna have the experience of CAF. Tony, please.
Thank you, Jorge Luis, and thank you for your time and for your interest in the panel. First, a couple of remarks regarding CAF. We are a supranational financial institution. We operate in Latin America and the Caribbean, but we are mostly owned by Latin American and Caribbean countries. We only have 2 countries outside of the region, Spain and Portugal. So in our shareholder base, we don't have AAA rated countries. We don't have donor countries. So that makes an important difference between Gaff and other institutions. So we started more than 30 years ago our activities in the capital market with the lowest investment grade rating possible. And we have received upgrades throughout this period, having right now a AA equivalent rating, AA flat by Standard & Poor's, and AA minus, AA3 by Moody's and Fitch. So we started our thematic bonds in 2016. First, we issued a few water bonds in Asia. That was our first experience with thematic bonds. Then in 2019, we started issuing educational bonds directed to projects of education in Latin America. And in 2021, we issued our first nutrition bond directed to nutrition related, especially with child population. In 2018, having this experience with other thematic bonds, we started our green bond issuances. We developed our green bond framework based on the green bond principles and having a second party opinion by Sustainalytics. Under this green bond methodology, under this green bond program, we have issued around $2 billion of bonds in a total of 5 different currencies. In 2020, we developed a new program, which was the social bond program. This was mostly in response to the COVID crisis of 2020, given the demand from our shareholder core countries in Latin America. As you may imagine, this type of funds were highly demanded by our country members. For an institution such as ours, green projects and green bonds are in our DNA. We mostly finance infrastructure projects, green projects, social programs, and it makes completely sense for us to develop this green bond program and the other sustainable programs. Most importantly, right now, we have as a goal and objective that in 2026, the bank is planning to have 40% of total approvals being green project approvals. This is part of the idea of CAF to become the green development bank of Latin America. So this is an important objective that we have. So considering this objective and that the institution is growing, I don't know if you're familiar with CAF, but we recently approved a $7 billion capital increase. New countries are joining the institution. So we expect the balance sheet of the institution to continue to grow significantly. So basically, we would expect in the future to increase our green funding program substantially.
Great, Tony. Thanks a lot for the ideas on the CAF experience with these bonds. Finally, Betty, if you want to give some final remarks and conclusions.
Great. Thank you very much. Like I said, I'm from Latham and Watkins. I'm going to offer the legal perspective, and I've very interesting to hear everybody's remarks. And so I've been given the difficult task of summarizing all of this and pulling it all together. I prepared some remarks, which I'm actually just going to toss aside and talk about some themes that I heard and try to pull all of the strands together. But I'm going to pull it together from a U.S. perspective and also from a private markets perspective, which I think hopefully my panelists will be surprised to see there are many, many common themes, but some differences that we can discuss. And so what I wanted to start with just generally sustainable finance. I was really pleased to hear that a lot of the panelists expanded the topic from green bonds to social bonds to sustainability-linked bonds. I work on a lot of sustainability-linked loans, and I want to talk about that. All the themes are all of the same. I'm going to talk about and add and augment to the trends and data that you offered. Verification is a big topic. Standards, absolutely a big topic. My colleagues and I are on lots of different committees working on these very same frameworks. I'm on LSTAs, we're on ICMAs, we're on all of those. Greenwashing is a tremendous concern here in the United States, so I really want to touch on that. Eligible projects, we've had some problems with that. SPOs, I want to get into that and potential regulation of the entities that offer SPOs, as well as the convergence and the sort of shrinking number of entities that can offer that. And reporting. As a lawyer, I do the reporting, so I can talk about practically what that looks like and the trouble with that. And then I'll end, if I can, with just some information on Latham's experience in actual sovereign sustainable finance transactions. So starting with sustainable finance in general, personally here in the United States, I represent some of the bulge bracket banks as well as the issuers in these sustainable finance products. So back in, as well as direct lenders, which is a new development. So I saw this starting in like 2018 when I was representing banks like Bank of America, Citi, JP Morgan. They were sort of the leaders in the space in doing sustainable linked loans. Bank of America, I think, or says they created the first like green bond here in the United States back in like 2013. I was involved in all of these things. You know, green bonds, of course, are use of proceed bonds. It's very different than the sustainability-linked loans or bonds that we're talking about, which go by like performance. So it's either project or performance-based. So that's the big difference in my mind. Lately, I've been seeing sort of direct lenders, private capital, who have a lot of money looking into this, and I've actually developed a couple of programs for two that I can't name right now, but they're really interested in doing this. Maybe going a little bit out of order, but I really, really liked, Juan, when you were saying about like incentivizing. It's really interesting because in the beginning that was really the point here in the United States, was like to incentivize borrowers to do better, and that banks would be willing to take less money and less of an interest rate to step down in order to do that. Here in the United States, it's interesting. They're moving away from that incentivizing aspect for whatever reason, maybe because of greenwashing, or maybe they're trying to say, the fact is, if a borrower or company is going to be engaging in this, they're less risky, and then therefore it should be priced in. So just as an economic matter, as opposed to trying to do better. That could be an American point of view, who knows. In terms of trends and data, you had so much good trends and data. I wasn't even going to do this, but I'm looking at this, and from like 2015 to 2022, sovereigns and agencies significantly contributed to the sort of high volume of sustainable bonds that we're seeing. It's like typically anywhere between 40%, 43%, 57%. So this is, a tremendous area of growth. Verification, that's a tough one. Like verifying this, it's really difficult to say how you can do that. In our experience, the companies that I've helped do this, they're the big household tech companies. They want to be leaders. They have the bandwidth. They have the sophistication to do this. You're penetrating smaller markets, or developing countries is a little bit harder, and it takes a lot of money and time. So that I see as a sort of major obstacle in this area. In terms of standards, yeah, definitely frameworks. It's all the same. So everybody had the same thing. So we're converging, whether it's by regulators or the market has decided, what makes sense or not. Definitely, at least with respect to KPIs, which we've been talking about, they need to be ambitious. And so I can't remember, because all the panelists were so impressive, but someone had said, one person's KPI is saving the world, the other one, thinks it's greenwashing. And it's kind of true. The way that I see it, at least with respect to a country or a company, it needs to be ambitious, core, and material to either their business or their country. And that's one way. So the KPIs aren't going to be one size fits all. In working on one of these products for one of my clients, they were like, can you just give us a library of KPIs that are going to work? I'm like, no, you can't, because then it would be greenwashing. You can't say, oh, do all these 5 things. It may not apply. So I just warn that, and that, of course, is from a lawyer standpoint. Maybe I see litigation everywhere, like around the corner, but that's just the way it is. So, that's why I guess I was asked to join to provide at least that aspect. In terms of eligible projects, one of the very first green bonds I worked on for a household company name, tech company that I can't mention, back in 2018, they didn't even have a framework at the time. Now that's de rigueur, but they just had, like, in their offering document, a use of proceeds section. That was it. But, because I can't say the name, but everyone knows it, they're like, sure, we'll buy it. And they really, plenty of cash, this company, but they issued it. And now, and I help them with their annual reporting, because that's part of it, they're having trouble finding enough projects to allocate, their proceeds. So we're dealing with that right now. We're thinking, do we have to call the bond? What are we going to do? We're not going to do that. So we're, actively looking for projects that they can allocate this money to. So that's just something I wanted to mention. In terms of the second-party opinion providers, you see whatever, Sustainalytics, S&P Global, many of these are my clients, so I, whatever, I put that aside. But it is interesting to, that is now typical. And it is a roll of the dice a little bit, like, let's hope that they agree that this is going to work. Maybe in terms of greenwashing, I guess we're focused on, there's, one of the largest meat producers, I'm trying to anonymize this. They were accused of greenwashing in one of the, sustainably linked bonds they issued recently, even though the second-party opinion came out and said it related to carbon. You probably know, which I don't want to name the company's name, but it's very obvious that their KPI was only including Scope 1 and Scope 2 emissions and not Scope 3 emissions. And if you're a meat producer, I guess Scope 3 is pretty high, but then there's this allegation from some not-for-profit, and they sent a complaint to the SEC, the United States Securities and Exchange Commission, saying this is greenwashing. The SPO kind of said it already, it was all disclosed. So there's a lot of this going on right now where NGOs or other groups are skeptical about these targets and whether these are actually sustainable finance. Reporting, I mentioned that, my lawyer joke that I work on this all the time. It's true, and you just want to make sure that you disclose everything, that there are no material omissions and definitely no material misstatements. And finally, if you'll allow me to just kind of mention, since I am here from Latam, we recently represented the Saudi Arabia's public investment fund on their green bond. So that was very exciting. And I think that was exciting for them because it was their first ever green bond and its first one issued by a sovereign wealth fund with, first ever 100-year century green bond. And the proceeds are going to be earmarked to fund and facilitate the sovereign's plan to reduce its dependency on hydrocarbon energy sources and to fundamentally reorient and diversify its economy towards sustainability. Really pleased to say that we represented in the Republic of Ecuador social bond, IDB, as guarantor in the first ever sovereign social bond there, as well as for the Seychelles blue bond, represented IDB again as guarantor. And I'll leave it there. Thank you.
No, thanks a lot. Oh, very interesting as well, Betty. So I think we had a very rich conversation with the different experiences. So, now we have the floor for question and answers, if someone has a particular one. Yes?
Thank you. Let me introduce myself. My name is Silva. I am from Spain. I am a U.S. reporting. I'm New York reporting. I used to work here for 5 years at Recruitment Analysis. I do international arbitration. And I'm specializing on climate, ESG disputes, carbon governance. Actually, my plan this morning was some climate change disputes. And my question would be to all of the panelists, what type of disputes do you expect to arise out of these green bonds, new trend, or however you want to call it? What type of disputes do you expect to arise in your different jurisdictions or in your experience? I don't know who wants to take the question, but I'm happy to hear all of you if that's
It's hard to answer because we don't want for disputes to appear. But I'm trying to think generally because one key issue I think somebody mentioned here in the table, the public policy, like the public good we're also providing. It's not just, of course, it's financing, public financing, and that's the first objective, and to have it at financial conditions that are, but then comes also the benchmarking. And so for us, it's also, there's this public service or public good feature of opening also markets for the private sector. In our case, the private sector opened the market internationally before the sovereign, but now we're innovating and opening it for other private sector. And I'm mentioning this because this means that we're going to have more and more private sector issuances, and we have to be very aware that all of this that we're talking about and the standards and the frameworks and selection of projects and even the KPI, if they're going to be SLBs on the private sector, meet the standards and are verifiable. So without saying it's gonna happen, I think the selection of projects is gonna be the biggest challenge, and I think where some things may not go, I don't know if it's a litigation, but finding the project in order to use the proceeds and allocate, I think it could be, we're a small country, and we're growing very fast into having our share of the energy matrix larger and larger on renewable energies, but still we need to boost a lot of these different industries that match, the criteria. So
far, I don't know if someone else has some particular view on this.
I'm sure Latam and Watkins doesn't want to share your
No, I have no problem with that. I share a lot. I guess a couple of things, at least in the United States. Definitely, if it's a registered offering, if it's a securities offering, you can claim any kind of fraud in a 10b5 claim. The banks are a big client of ours, and they've for a long time been asking me questions about, as underwriter of these bonds, could we be sued? Because they're the deep pocket, right? Yeah. They're the ones that have the money. And so I'm working with some banks right now to determine which deals should they do and which they can't. Is it as simple as saying that this particular deal didn't comply with the green bond principles? No, because that's not going to identify what the risk is. What's the reputational risk? And having to do ordinary risk diligence of the borrower is going to be key from the bank standpoint to sort of defend themselves. And then also we're seeing an increase here in the United States on sort of consumer protection claims. So not just from a securities law standpoint, but if you're misrepresenting and greenwashing and selling a product, well, you can easily invoke consumer protection laws in the different states in the U.S. to say, you sold this to me, I bought it in California, this is absolutely fake and false. So we're seeing a lot of that elsewhere in other spaces, but I think that those types of thought processes could easily be applied here.
Good. Now go ahead, Carola.
I just wanted to add something that it's not on identifying the problems, but we're trying to identify some solutions looking ahead. And so we're working now on doing our own taxonomy. So that, of course, we want it to be interoperable, but it's going to have some local aspects. And for instance, in the European taxonomy, you don't have the mining sector. So that's going to be huge for us and also for the region. And so we're having the help of also multilaterals. I wanted to say CAF also and ADB, they're going to help us. So we are pretty conscious that could be a problem, and that we want to be aware of how we can identify our own greens there in the market.
So that would be interesting to see how it compares to the EU green, but right? Because it's off the.
EU trying to adapt
Yeah.
And also we've been put up anyway. So
Yeah.
it's a big deal. We already defined all the elements from where we need to build on, and now we're going to build it. So we're just going to launch it. Yeah.
Good luck.
Project.
They want to be the gold standard, but hopefully you will be.
Yeah. It's going to be a tough thing.
Thank you.
I want to add about that. I'm from Uruguay, and we are working also in our green taxonomy, and I think it's quite. It could be something where we could have some problems about how the private sector use that green taxonomy. We know that countries that are far ahead developing their green taxonomies, that it's not an easy task. We know that it's difficult, and we are quite, as I said, worried about how the private sector would use it, and perhaps there are some litigation aspects. I think most of us, we are economists, and we don't think about litigation, and we want to be far away of litigation, but perhaps there it's something that would happen.
I'm just curious, the Mexico taxonomy, are you looking at that one too, both of your countries, or no?
Yes. No, we look to the European, but because Mexico, Colombia, and Chile are far ahead, we have been in touch with them, with the teams that are that deliver.
Colombia finished, but hasn't been able to implement, and now we're about to. So we're. The good thing is that we're all learning about each other's experience, and
And also, I think this is an excellent question, and looking forward, this is something I think certainly that would be, I mean, it's an interesting field. Perhaps you'll have a lot of cases going forward. I don't really know, but right now, if you look at the frameworks too, it's voluntary. People are not mandated to do so. Mostly countries are just voluntarily developing their frameworks to guide the process. But like they said, I think one critical component there is project selection. That's why I understand that in the framework, the second most important thing there would be, let's say, after the use of proceed is defined, process for which you need to select and evaluate these projects. Because now, this is a framework. It's like something, it's an agreement sort of between you and then the players, right? You took those funds, those monies, with the aim that it is going to be invested to A, B, and C, climate. And then investors give you their money because of that. They're very much keen about, they want to contribute to helping, address this climate change. But later on, maybe they realize these funds actually were not used for those purposes. So the frameworks that we have right now, are they legally binding? That's the question I may want to ask myself. I'm not sure they are. But going into the future, to some extent it might be. But it's a thought-provoking question, and I really like this. I think one should really think about it. Thanks.
Oh, very good debate. Thanks for the question, Pilar, right? Thank you. I don't know if some other colleague here in the room want to pose some other questions. Go ahead.
So moving beyond project selection, how do these frameworks address the eventuality that some projects, regardless of how well vetted and intentioned, may succeed financially but fall down on their stated ESG KPIs? Are there different accountability mechanisms in place, and how do those differ from those in place for conventional funds?
Good. Who would like to take it?
Sounds like a Latam question.
Here, people vote for Latam, but I don't know if they want to take it.
I don't know. It hasn't happened yet in our case. Sorry, no, it happened. It hasn't happened yet. The first bond was in 2019. 2019. But they're very, very, very specific projects. Like, for instance, in electromobilization, it would be like a metro line, for instance. So I was thinking it's not that they become less green, but it could be that the project is at risk itself, not that it changes its status. I don't know if because I thought you were saying something like it would be less green than at the beginning it was.
If I may elaborate, earlier in the presentation you gave an example of going from 17% in the workforce to 40.
Yes.
So suppose we're successful, project's great, financially successful, investors are paid back, but we hit 30%.
Yeah.
That's great, it's progress, but it wasn't.
Yeah, I know that is actually something that is contemplated in the contract. So this is the percent of women in boards in firms, and so if it's not reached by the date in which this KPI, this goal was settled, then we get the opposite, a step up. And so it's about 15 basis points. Well, it depends on the contract. So no, we in this case, we accept a financial penalty if we don't comply. So we need to align the policy and try to be successful.
Yeah, I could add on to that. So one of the things in greenwashing that we're focused on, some of these actually only have a step down and not a step up. So that's a question actually in the United States versus Europe. And so these frameworks that I'm developing are products for some of these clients who have operations in the US and Europe. It's sort of like two different ones that I'm creating right now. So the idea is like if we're focusing on incentivizing, you don't want to punish them. You're going to give them the step down for trying, right? Some lenders have said, or purchasers, investors, like, what do we do with that additional like penalty? Like that's a windfall. That wasn't what we were trying to do. We were trying to actually help, and then now we've made more money. So there's some like moral questions that come up from it. But I definitely think that there should be apologies. But you've agreed to it, like a penalty if you don't make it. You've set this target. You better see it through.
Good. And I think the Uruguay case, right? Looking at your own case too, Uruguay. I think it's to some extent and a response to what you've said. In the sustainability linked bond that you've issued, you have SPTs, sustainability performance target set. I think you have the forest cover as one of it.
One is up and the other.
Exactly. Now, the KPIs are set. If Uruguay as a country, as a borrower, overperformed, then there's going to be a step down. It's an incentive, right? The coupon they're going to be paying, it will lower.
Yes, so you meet,
If they-
meet the goal, so
Yeah.
this is overperformance.
We put a buffer.
Yeah.
It's like at certain level,
Yeah.
if we don't perform, if we don't achieve that buffer, it's the interest rate goes up. It's how to say the step up in the coupon rate. If we accomplish this, if our target, if our value in 2025, it's inside this buffer, the coupon rate stays flat.
Mm-hmm.
And if we overachieve, yes, we
Step
obtain
down.
the step down.
Mm-hmm.
It's like the three options we have. Yeah.
I have a question. How do those rates, either the going-in rate or the step up or the step down, compare to your normal sovereign rate that you would pay on a conventional bond?
For us, we get a premium, let it go. But yeah, we've calculated that at least on average it's like 8 basis point saving. And
And the step up, if you fail to meet the target, would be those 8 basis points, or would be more?
It's 15 basis points.
Oh, so it's
but
a
it
real-
depends, because there are some with different maturities. The one that we issued today, because we have the novelty today, was with a 15 basis points step up after 10 years.
For us, it's the same, but we have two SPTs, and they move independently, so they can't accumulate. So it could be 30 basis points the reward, let's say, or 30 basis point the punishment.
This is very unusual for sovereign bonds. Don't typically work like this ever. So this is this is just novel in general for sovereign bonds, not just. I can't see the IDB issuing a loan like this, for example.
No, you mentioned your stock of green bonds. We have on thematic bonds 43 million. Billion. Yeah.
Good.
Large stock. It's
Well-
about a little more than a third of our debt stock, public debt stock.
Oh, wow.
Yeah, it's a lot.
Okay. Thanks a lot, then. Thanks for coming, and thanks for the panelists. Thank you for